$42 billion worth of Bitcoin. Yes, you heard that right. But why? And what does this mean for you? Let's break it down. Buckle up, because in the next 10 minutes, we're breaking it all down. Simple, clear, and easy to understand. So, first things first, what is MicroStrategy and why are they so obsessed with Bitcoin? MicroStrategy is a business intelligence company, but in recent years, it's become almost synonymous with one word, Bitcoin. Led by their bold CEO, Michael Saylor, MicroStrategy has been stacking Bitcoin like it's Black Friday every day. Why 42 billion? Okay, so let's address the elephant in the room. Why 42 billion? That's a lot of money. To put it in perspective, 42 billion could buy you around 100,000 Lamborghinis or fund entire space missions. But MicroStrategy isn't buying flashy cars or building rockets. They're investing in a digital asset they believe will outperform every other asset class over time. Let's hear what Michael Saylor has to say about MicroStrategy.
Bitcoin treasury company, we're powered by a Bitcoin reactor. We've got $35 billion of Bitcoin and it's spinning at 100 vol. So the way we make money is we're selling the volatility and recycling it back into Bitcoin. And we're also stripping the volatility and the risk and the performance off of fixed income securities. And we're transferring that to the common stock. So our common stock is delivering 2x Bitcoin, 2x vol. So Andrew, if you want to understand the economics of this, we generate a spread. The BTC spread we generate, it's a function of the equity premium, the convert premium, and the Bitcoin premium. The Bitcoin premium is the ARR of Bitcoin versus the US dollar. 2 weeks ago, we did 4.6 billion of an ATM. We ran it at a 70% spread. That means we made about a $3 billion BTC gain in 5 days. That would be about $12.50 a share. But over 10 years, that's $36 billion, or about $150 a share, just on that 1 week. This week, we did a convertible bond, $3 billion at an 80% BTC spread. That's a $2.4 billion gain. That's about $10 a share. But over 10 years, that's $125 a share to the shareholders. I think that the thesis of the shorts is if the premium in the equity disappears, we can't make money. What they miss is that when we actually borrow money at 6% and we invest it in Bitcoin, and Bitcoin goes up 30%, and by the way, Bitcoin's going up 60%, we're getting a 90% BTC spread, but it would be 80% BTC spread, which means the $3 billion fixed income raise in preferreds or bonds generates the same $125 a share and $30 billion over 10 years. So once you understand that, you have a different view of the company. The Bitcoin has an extinction level event and goes to zero immediately tomorrow. But every long investor in MicroStrategy is a Bitcoin maximalist or a Bitcoin believer. They've accepted that risk. Once you accept that risk, what do we expect? We expect it's going to go up 29% a year for the next 21 years. It's been going up 60% a year. So the people that are buying the equity are buying the equity because they want 2x Bitcoin, they want 2x vol. And once you accept that idea, you can see, over the last 2 weeks, Andrew, we've generated $5.4 billion in BTC gains. We're making 500 million a day. I'm staring at my screen and we're selling dollar bills for $3, sometimes a million times a minute. And so it's not impossible. I mean, we may very well be the most profitable company in the United States, growing the fastest right now, because there's not many companies that are making $500 million a day doing what they're doing. And so if you don't like Bitcoin, you don't want any piece of it. But if you like Bitcoin, then this is a monster for you.
Michael Saylor believes that Bitcoin is not just another investment, it's the future of money. He argues that fiat currencies like the US dollar lose value over time due to inflation, but Bitcoin, with its limited supply of 21 million coins, is like digital gold, rare, valuable, and immune to inflation, the strategy behind the move. But here's where it gets even more interesting. MicroStrategy isn't just throwing cash at Bitcoin. They're borrowing money to buy it. That's right. They're leveraging debt to acquire an asset they believe will skyrocket in value. Risky? Absolutely. Genius? Possibly. But here's the thing. If Bitcoin's price goes up, MicroStrategy wins big. If it crashes, well, it's game over.
Thoughts on constructive digital assets policy, either in confidence or publicly. And if I'm asked to serve on some sort of digital assets advisory council, I'm probably would do so, yes. Said it wasn't clear how enthusiastic the capital markets would be, but we got a very enthusiastic reception. And then after November 5th with the red wave, we saw a big sea change in the political environment. And so we went faster than we had thought we were going to go on October 30th. Our goal is to continue to raise capital, $42 billion in capital. We'll revisit our capital plan, and we'll put in place a new plan subject to market conditions at the time. The equity capital markets were very enthusiastic over the past 4 weeks, and so we're always considering, is it the convertible market? Is it the fixed income market? Is it the equity market we want to go to? And that's going to change from time to time. I expect that mix will shift more heavily toward fixed income markets in Q1 as we go forward, because right now we're probably getting a little bit too delevered, and we'd like to actually get more leverage. We have about $7.2 billion of converts, but $4 billion of them are already essentially equity. They're through the strike price, they're through the call price, and they're trading with a delta approximately 100%. So they're looking like equity, and so we would like to go back and build more intelligent leverage for the benefit of our common stock shareholders.
What does this mean for you? So you might be wondering, what does this mean for the average investor like you and me? Should we all start throwing our savings into Bitcoin? Well, not so fast. Bitcoin is incredibly volatile. Its price can swing wildly in a matter of hours. But one thing's for sure, when a major corporation like MicroStrategy bets $42 billion on an asset, it sends a loud message to the world. Here are 3 key takeaways for you. 1. Understand your risk tolerance before investing in Bitcoin. 2. Diversify your investments. Don't put all your eggs in one basket. 3. Pay attention to big institutional moves, because where the whales go, ripples follow. So, is Bitcoin the future? Will MicroStrategy's gamble pay off? Only time will tell. But one thing's certain, the world of finance is changing, and Bitcoin is right at the center of it all. Do you think MicroStrategy is making a smart move, or is this a recipe for disaster? Until next time, stay smart, stay informed, and happy investing.